Yo, yo, yo. Good morning. Happy Friday. Here's the video I said I was going to make last night, but I went sleepy. I went night-night. I was very tired. I've been working this new job. Started last week. So schedule being 5 a.m. to 2:30 p.m. Monday through Thursday, and then Monday through Friday the following week. So I'm off every other Friday, which is cool. I got some plans for everyone. On Fridays that I'm off, I'll be here all day, as I am now, recording this video for you. So let's just jump into it. In my absence, I haven't been, looking at the charts. Been looking at Webull, just my watch list, watching the price, and then trying to find somewhere in this memory of mine an image of the chart and what it would look like with my levels. But 4 days ago, ahead of my schedule change on March 6th, I put out some targets for some symbols and the S&P 500. Now, these targets were for March 31st, meaning the entries on the contracts, whether they were calls or puts, some were calls, some were puts. The expiry for those calls or puts were 3/31 or March 31st. And then I gave a price target. So some of the calls were for strikes that were very close to the price targets. There wasn't much of a threshold between the two. It was a matter of $4 or so. And then some of the other ones, there was a larger threshold between the price target based on my levels and the strike of the contract. And I do apologize if you see ads popping up on my trading view. I switched my debit card or canceled it, and I've yet to adjust my payment details here, so you'll probably see a few ads pop up throughout this video. But I don't want to waste your time. I want to make this quick. I don't have fucking 45 minutes to look at a chart and say, well, maybe this will happen. Oh, look at all my lines. All right, so we're going to hop right into it. We're going to start with Netflix. I know the doomers are back on everything, but Netflix was quite the call. We did really, really well on 300 strike puts. Called that out. I'm on the weekly now. Let's go down on the daily. We entered 300 strike puts for, I think, mid-March at this rejection at 366.07 to 350.91. This was a tough week. I entered and exited a few times just to get a little bit of a better entry. I averaged down, and a bit of uncertainty here. We were rejecting off this golden pocket between the 5.618 and 4.618 extensions, being 581.39, and then 4.618 being 155.05. Those are the parameters. This is a golden pocket between those two parameters. And then just quickly, just so you know, all of these extensions and then the micros between them are derived from price action that occurred in 2002. And it's pretty fucking accurate on everything. Anyways, we nailed those 300 puts. Shout out Ant Making, or on Twitter. I think his name is Money Making Greg. I think he went plus 200% on the 300 puts, and now he hopped into some 260s or something like that. Anyways, March 6th, I put out a signal for 260 strike puts for March 31st with a price target of 256.88, being the 0.382 here between the two extensions that I just described. And we're really getting that breakdown. Perfect rejection up here. This has a lot more room to go. You'll probably see 273-ish, maybe catch a little bounce there. And again, this is just from visual supply and demand. It's an obvious spot that it might bounce. Somewhere around 270-ish before falling to 256.88. Clearly support, or true support is what I call this. And then essentially this is a bear flag, I guess you would call it. This breakdown could go much lower, but we are in those 260 puts for 331 signaled 4 days ago. I forget what they're at now. I think they're still slightly green. And Netflix is currently sitting at 297.89 in pre-market. Terrible last few days for Netflix specifically. Netflix is not doing well. And I love to see it. I fucking hate Netflix. And I hate people that just binge watch Netflix. First of all, there's no good shows on Netflix. Point blank, period. Second of all, it's too expensive for the shit shows that you get. And thirdly, get the fuck off the couch. Alright, so that's Netflix. I still like the 260 puts. Again, price target 256.88. This is what I was talking about. It's like a 3 and 22 cent difference between the price target and the strike. But because it's the end of March, 331, I do believe that these will be significantly profitable if this move occurs fairly quickly, which I do see that happening. If we take a look at the macro RSI, macro being daily, weekly, monthly, we had a big signal on the daily with this signal line cross on MACD. We are now under the 0 line. RSI is approaching oversold territory on the daily. And what I like to do here is pay attention to the separation between the signal line on MACD and the actual MACD line. And I would say this has a lot more room to continue. You know, some people play bounces out of oversold and rejections in overbought territory, but you can get a lot of false signals. So MACD is pointing down to the depths of hell. RSI is also pointing down. We had a cross on the 200 SMA on RSI back on Friday the 17th in that entry zone for these 300 puts that did very well. And we're just going to watch this baby collapse. Next is NVDA. Speaking of collapse, I saw someone last night say that they called the collapse on NVDA. I didn't know NVIDIA collapsed. I guess this daily is a collapse, but nonetheless. 4 days ago, we had a 250 strike call signal for NVIDIA. Same expiry, 331. Price targets 253.69 and 282.04. Now, 282.04 is a bit of a ways away. But that has been my price target since December, since we got this breakout at the bottom of this proposed right shoulder, which I can now say I believe this would be a confirmed inverse head and shoulders pattern that played out. It's not a pattern until it is a pattern. You need that confirmation. But that's what we were rolling with here. We had a beautiful entry here. 150s for January like 17th or something. They went severely in the money. I think it ran to $171 or the 12.618 extension. Had a little bit of pullback support, and we re-entered, I think, 220s or something like that for the breakout over the neckline. But again, 250 strike calls for March 31st. Price target 253.69. That's what we'll focus on. Target 284. 282.04, the 13.618 extension. Just so you, sorry, it's so messy. That's the origin price action back in 1999. And then you have all the macro extensions and the micros. No one can fucking copy me, all right? You don't know what you're fucking doing. Listen, I'm the king of Fibonacci. This shit works on everything. So 253.69, the 0.786 between the 13.618 extension at 282.04 and the 12.618 extension at 171.93. You're sitting in golden pocket here. This was a big entry level for us. 237.18 down to 233.45, and we're just going to go down on the monthly. I like the 30-minute a lot. and you're just bouncing at GP again. So I am expecting a continuation, unless of course something happens with NVDA, like they aren't allowed to sell something to Hawaii. I hope they aren't. That would be terrible for the United States. But that might just turn out to be a nothing burger. So I don't fucking know. But I'm still bullish just from the technical setup. These plays that we made here on this pattern, these weren't off news or anything. I had no news confirmation. It was simply technical analysis. Technical analysis works. Anyone that tells you it doesn't either doesn't know how to do it or still needs practice. But yeah, so we're bouncing out of GP. Tough week so far. Everyone's got their panties in a bunch. Doomers are back on everything. Again, someone said they called the collapse on NVIDIA. It's like, what? This to this? You called... And not to shit talk, but I read it. I'm like, NVIDIA collapsed? I had to check my phone. I had to check the chart. I'm like, wait a second, what? It's down 3.94%. All right? And... all right, we're down 3.94% this week, but we're up 76.65%. You might have called the 3.5% collapse, we'll call it, but your boy called the fucking 76% rip. And it's still got room, guys. It's still got room. I'm still in those 250s for March 31st, all right? Everyone's asking me every fucking day, are you still in this? Are you still in that? You still holding the video calls? Yes, I am. We got 21 days, 21 to go until the expiry. A lot can happen in 21 days. Everyone's fucking bearish now. And everyone thinks that they're going to call the next market crash. It's almost a race to be right. It's like how a broken clock is right twice a day. But these motherfuckers try to be right like 3 times a minute 2 years into the future with what they're calling. Just trade and analyze what's in front of you. Everyone wants to be the guy that says, I called the market crash, guys. I told you it bounced off the 3504. Love you, Dave. It's just a cycle. Get out of this mindset. I think we're all just really conditioned. Unfortunately, retail has become very conditioned. And I don't know what's worse, the echo chamber for like the GameStop and AMC meme stocks, or like the fucking the S&P and S&P's underlying echo chamber. It's like literally bull versus bear when neither exist. We don't fucking control anything. Your buys and sells don't matter. Your puts and calls don't affect anything. I'm rambling now. All right. 250s for 331. Yes, I'm still believing in it. Quick look at RSI and MACD. We'll go down on the daily first. So daily RSI is sitting above its 200 SMA. It has been since the right shoulder breakout here at Golden Pocket between the 12 and the 11. Excuse that ad. And it hasn't broken underneath the 200 SMA of RSI. When I say 200 SMA, I'm usually referring to the one that I have on RSI. I retested it when it bounced off 207.71 to the T. We re-entered calls here up to 230. Those did well. Excellent. And it's interesting because MACD has been below its signal line on the daily, while RSI is maintaining its 200 SMA. And it hasn't broken down. So a lot of support here at 237.18 and 233.45, the Golden Pocket. If we get a signal line cross here, this thing has potential to go. 253.69 being target 1, but I'm really looking for that 282.04 price target to complete this this inverse head and shoulders. This would be one of the greatest fucking technical analysis plays of all time, by the way. Like, I'm going to print this out and hang it on my wall. It's up there with my calls on Apple down to 124.64. It's up there. This is gold right here. This is textbook inverse head and shoulders playing out right in front of your eyes. All right, kid? Nothing but Fibonacci. So we're maintaining that 250 strike call with the price target of 253.69 and 282.04 on NVDA. As it currently sits at 234.18 in pre-market. What's next? What's next? Apple. Apple. Apple's a tough one for me, guys. Apple's a tough one. So, same approach that I used on everything. Look at this cute label. Apple Historical Golden Ratio Roadmap. That's what I call it. All levels derived from price action in the 1980s. This initial downtrend here, 16 cents down to 5 cents. Isn't it incredible how we can just extend everything and find excellent levels to play off of? The true levels, as I would call them. Anyways, Apple. 4 days ago, we said 165 calls to 331. I'm sorry, 165 strike calls, expiry 331, price target 164.83. Bullish daily cross on the RSI, weekly MACD continuation. We had already been in 155s that we swung from the previous week, and those fucking paid. I forget what they went up. It was like 400%, something crazy. This was my first target, 155.26. Entry level golden pocket between the 7.618 and 6.618 extension. You know, you can't see those levels now. But nailed the 155.26 target. Like, just rejected right off of it. Beautiful accuracy. Thank you. And we're approaching the entry level, 149.47 to 148.14. Looking like support is going to hold here. I'm on the 30-minute now. We have an interesting doohickey here. This is an interesting candle setup. I'm looking for a third one to form about this large. And we're probably going to have a nice big gap up, back up to about 155.26. Target 1. So 165 strike calls for 331. Price target 164.83. Very close to the strike. But that is the 0.236 here, 164.83. I don't know. Apple's a tough one. I could argue that this is an inverse head and shoulders forming. In fact, I will. And we're just going to draw it out really quickly. We're going to go from my call to 124.64 on August 28th, 2022. Apple to 124.64, kid. Listen. It hit fucking 124.17 as a low. It bounced right off the 6.618 extension derived from price action in the 1980s. All right, pal? Listen, I'm not saying I'm the greatest of all time, but I'm the greatest of all time. We're going to start it there. We're going to go left shoulder. We're going to go head. We're going to go... Am I on the daily? Okay. Whoop. We'll fix that. Should go down to the 4 hour. We'll go down to the 4 hour really quickly so we have a few more peaks to work with. We'll go there. Does that look alright? I try to put these plots in the most logical place because it gives you an automated neckline to work with, which I like. And this part, we don't know yet. Could be invalidated if it breaks down past like 133.14. Anyways, that could be a inverse head and shoulders forming. Really been nailing those. My shit don't stink because I called 124.64 to the penny. If this plays out, we could go much higher than 164.83. We could go all-time high, essentially. The next level I have above the all-time high at 183-ish is 195.94, I believe. That might be wrong, though. Anywho, we'll go down to the monthly. Check out RSI and MACD. RSI bouncing out of oversold territory. MACD curling back above, or back to cross its signal line on the 30-minute. Really like that. I'm liking 155.26 again for calls. Look for that entry some point today around open. Probably going to be doing that. Might wait for a little bit more of a pullback, but we'll see. We'll pay attention to just regular supply and demand zones that you can identify with your eyes. Some gaps here between my levels. They usually just ping pong back and forth pretty nicely, but Apple, it's a tricky one. It's a little bit larger of a scale between levels that I have. I actually pulled levels between like the 0.236 and the fucking level below it, just to fill the gap, and then just got rid of everything besides like the 618. But anyways, look for that entry today. I'm gonna maintain the 164.83 price target for 331. I'm gonna maintain that. I do think Apple hits that. Maybe a little bit higher. We will see. We will see. Nothing is guaranteed. Again, none of this is a guarantee, guys. This is just my educated analysis, or uneducated analysis, depending on who you ask. Experience, nonetheless. What's next on the list from that day, 4 days ago, 3/6? Meta. We've been very patient with Meta. I called it a sleeping giant on March 2nd, and it was just riding the 0.786 here. Just so you understand, again, same idea, origin price action back from 2012, $45 even down to $17.55. All the extensions, all the micros between the extensions, yada yada yada. Those are the levels. Beautiful rip out of golden pocket here between the 2.618 and 1.618 extensions. 148.51 to 144.10. Ripped. Fucking never reached the 2.618 at 206.48. Pulled back down to the 0.786 here. And I had already been in 206s. Like for late February, I think I entered them somewhere around here. But zucked me hard. And it just rode the 0.786 for, let's see, we'll count that. 16 days. And then finally I said Meta is a sleeping giant. Mark must have saw it. He announced that Facebook would now be partnering with Ukraine or something. And we ripped. So that was a joke. So we're ripping off the entry level at 168.80. Yeah, there's like triple top here in the 30-minute. Not too worried about that, but it does look a little bit suspicious. Little bit suspicious here. We'll look at MACD. Need this signal line to cross. We need a signal line cross here. It does look like we're gonna get it. Momentum is picking up. I like how the 30-minute is flat here. Off this fucking breakdown here. RSI sitting at 38.34 on the 30-minute. Above the oversold territory, creating slightly higher lows on that 30-minute, as you saw. Daily MACD. Why is my shit so messed up? RSI breaking down from overbought territory, obviously, off that rip. Hasn't approached its 200 SMA yet. You have not seen a daily cross back over the signal line on MACD really since, and this is on the daily, you had a cross under it on the 15th, and we broke down to 168.80. But you haven't had a signal line cross or a bullish one since December 28th, it looks like. And what's interesting is you have this little false signal here. And where's the price action for that? Right on this day. All right, so I have a level at 115.39 here. Had I been trading this back then at the 0.382, this might have been a false bear trap day. You see this signal line cross on MACD, breaks under the 0 line, and RSI is struggling, you know, in this range here. If I see that, I might go short there. You know, I might play a breakdown to the level below at 157. But as you can see, the next day you had a strong cross on MACD. RSI just kept going. And if you look here, it's ping-ponging between overbought territory and not overbought territory. See this separation on MACD? When this gaps with the signal line, it's usually going to continue, even if you're in overbought territory. Okay? It's usually going to continue. Some people just play short when it's overbought, long when it's oversold. They keep it very simple like that, but you can lose just using an RSI like that. So MACD RSI combo, very essential. Very essential. Meta 200 strike calls for 331 was the call. 200 strike, target being 206.48, $6.48 difference between the price target and the strike. I think it's very possible. Very possible. About 14% to go from where we're sitting now. And we're almost oversold in the smaller time frames. On the 30-minute, again, you're curling here. We do want to see this signal line cross. If this does not cross, you're probably going down to 168.80 again, if not lower. So you're creating lower highs here on another triple top. This could easily break down under 168.80. Support below that. This would be about a 18 to 20% drop to 148.51 and 144.10. Obvious spot to retest. You know, if you could imagine a double top here after this rip, demand into supply and back down to demand. It would be very symmetrical. Almost too predictable, too easy. So it's kind of suspicious to me. I'm going to play it by ear. I'm going to maintain the 206.48 price target for 331 for now. If we see a breakdown below 168.80, I'm going to have to say it's not happening. I'm going to have to say we're going down to 148.51 to 144.10. So watch out for the signals, whether it be calls or puts. We're going to just trade what's in front of us. And last but not least, Microsoft. Excuse me. Microsoft. Doing me dirty, Bill. This is the first time I've looked at a chart all week. So I'm just trying to catch up. Remember where my mind was at back here in the weeks before that. We had a 260 strike call for 331 on Microsoft. Price target 264.48 to 262.62. Obviously, target was this golden pocket between the 1 and the 2. Entry was 248.88 right here. I had already been in 260s, guys. I was in 260 strike calls like back here on March 1st. Playing that down off the 248.88 down to the penny. But it didn't happen. It didn't happen. You had this fucking thing happen. But I knew it was game time again, so I think I averaged down or something. I don't know. Anyways, that position was down almost 80%, and then all of a sudden it was up 5% when I woke up. I'm like, okay. And that was for like March 17th expiry, swinging from February. Closed it immediately. Really liked the setup here. And I put out the call for 260 strike calls for 331. Price target 264.48 to 262.62. I'm going to fucking maintain that price target. You might not like it. You might say, hey, yo, Welchie kid, there's a double top right there on the 30-minute, pal. If you look at RSI, it's pointing down under the 200 SMA. MACD seems like pretty strong bearish signal cross. But listen, we're going to give this thing a chance. We're going to give this thing a chance. Too many bobos in the kitchen. Killing the vibes, just trying to be right about everything, no matter the direction, so they can look back and say, hey, I told you. Listen, these fucking bears, they gotta be tired by now. You cannot not be miserable all the time if you're bearish. Like, I'm not miserable, I'm making money. No, you're fucking not. Buy a call. You're making money this week. It's not even like bulls versus bears. Now I sound like a retard. It's kind of just like singing you tune. You're tunnel vision. You're like, death to the market. SPY's going to 300. See, I've been saying it since 2021, guys. I've been saying it since 2022. Look, we're at 300. Don't be that guy. Anyways, going to maintain that 260 strike call for 331. If you haven't entered now or by now, do as you please. You're still above that entry level at 248.88. I wouldn't say you missed the boat, but just be cautious here because you could very likely fall to support another 1% down to 248.88. But again, I like a bounce. You're creating a flat fucking area here on the 5-minute. RSI is about to cross over the 200 SMA in a bullish fashion. You do have an interesting MACD setup on the 5-minute. This is tough to read here. This is a lot of chop, but you're sitting at support, creating slightly higher lows, and I'm going to go with continuation. So maintaining that price target of 264.48 to 262.62 by March 31st. You know, this beautiful golden pocket here between the 2 and the 1.618 extensions on Microsoft. And that's it for the underlines. We had Meta, Netflix, Apple, NVDA. Did I go over Tesla? We'll go over Tesla real quick. That's Apple. Not to toot my own horn, but on December 1st, I said Tesla downside target is 108. 108.46 being the 6.618 extensions. If you remember, everyone was calling for like a $50 Tesla here. I was the only one that I could see saying, nope, the bleeding's done, guys. We just had that beautiful head and shoulders pattern play out. Broke below the neckline. Lower low set at a major fib level, the 6.618 extension on Tesla at 108.46. December 1st, I said downside target 108. After we were rejecting off 189.25 here. And then shortly after on Friday the 6th of January, we bottomed out. And we fucking ripped. I remember who you were. I remember all you guys. Bobos. Listen. Can't fuck with the major fib levels. You gotta always expect and anticipate that bounce. But really, look how perfect this is. Origin price action back in 2010. price range of $2.03 down to $1 even. And it just gives you these beautiful ranges to work with. Near perfect bounces and rejections. This is COVID. You reject off the 5.618 at 53.41 at the peak of 2020 before the COVID crash. And then you find support at 26.30. What a quinky dink. What a quinky dink. And then, of course, all the micros. Looks better on the smaller time frames, but you get the picture. I didn't put out the fucking target on Tesla, but I'm just going to wing it here and say we're going to rip out of 171.87 to 168.02 again. And I'm going to maintain that 220 and 22 cent price target, the 7.618 extension. Look for my entries here today on Tesla. I'm going to be looking to enter calls. I think 189.25 is going to be the strike. If I see the setup, we really need to maintain this 171.87 to 168.02 price range. And if we do that, I'm in calls, not sure the strike. Probably going to play the larger strike here, pay a little bit more for premium, and really hammer that 220 and 22 cent price target. I think if we do see the recovery, it's going to be a very quick recovery to 189.25, and we'll go from there. So that's what I'm rolling with on Tesla. Move the entry level to 171.87 to 168.02 for calls at 189.25 price target. Probably a 180 strike if you're feeling frothy. You want to get really in the money with it. Or you could run those 7.618 extension targets, $220.22. Price target 220. But we'll see what happens. This will be an entry level for calls and puts. If we get a breakdown here, you're going down to 142.16. So watch 168.02 as support. That's like last point of support, but don't get faked out. You got to give these levels a little bit of room. It's awesome when it bounces to the penny, but as you see here, I think I got a little bearish here when we broke it down below the golden pocket or the 618 here at 168.02 before we recovered very quickly and we were off to the races again. So don't get false flagged. All right. Last but not least, SPY. On fucking same day that I put all these signals out, what was it, the 6th? The 6th on SPY. Where's that? 6th. Rejected them right off 406.92 to 406.30. I put out a target for 331. Price target being the COVID 1.618 at 413.75. Yeah. I'm going to maintain, guys. So we have the micros here. If you're familiar with this particular SPY chart that I'm rocking with, between the COVID 1.618 at 413.75 and the 08 3.618 at 394.24. Those are your levels that you're working with. Golden pocket at 406.92 to 406.30. Then you got 401.69, 398.84, 409.57. Shout out to anyone that swung 398s and 401s into yesterday, the day before, and sold it open with me. Congratulations. Those went up like 75% on those 398s. Sold at, I think we hit 401.48. If I'm remembering, yeah, 401.48-ish. Saw it at work. Said sell, not risking it. And then look what fucking happened. So congratulations if you swung and took profit properly. If you didn't, sorry. Anyways, 413.75 price target for 331. When we break down below a level like this, we're sitting at, what are we sitting at in pre-market? SPY is currently at 390.52. somewhere around here. You broke down below the, I call this the entry level. I'm just going to delete that because that wasn't the actual entry. You broke down below the 083.618 at 39424. You rejected off the daddy of all macro downtrends, essentially. I don't even know if I call that a rejection. I'm going to call that a retest of support. So daddy of all macro downtrends being from the all-time high to the next peak on Tuesday the 29th of March of 2022. And then you just extend that bad boy right. That is the daddy of all downtrends. I guess you could call that a rejection. But you are currently retesting this uptrend here. And you're failing at it right now. You're below it. But this is just extended from this bounce on Friday, September 30th, to the bounce here at golden pocket between the high of 2020 and the 083.618. So extended bright. This would be the third test confirmation. So we need a fucking recovery above this. Otherwise, you're going down to 38244. I don't know how else to put it. I'm not going to act like this is good. However, I'm going to maintain that 413.75 price target for 331. Yeah. There's probably a fib level that I could fucking find to fill this gap between 39424 and 38244. But I'm not gonna, because you can just use visual supply and demands. As you can see here, we're about to we're in demand, essentially. We're at the top of this demand level here. We recovered very quickly and ripped to 40169 back on Friday, January 20th. I've been here a lot, guys. We've been here a lot. We've been in this range for like the whole year. The whole fucking year. We are very experienced at these price levels. It's just a matter of getting it right and being on time. So I'm going to maintain that 413.75 price target, COVID 1.618 for 331. And watch for my signal today. See, on the 30-minute, we're not below this trend line that we're trying to set here. So, I moved. TradingView adjusts sometimes. It's interesting. Again, maintaining it. Watch out for the signals today. I'm going to try to smash some 394 strike calls. Really need support here. If I don't see it establish at this quote-unquote demand zone, a low of like 387-ish, you're going to have to find support at 38244. And I do believe you will find support at 38244. We had like a 16-day period. I think it was 24 days. We were trading between 37493 and 38712, with the midline being 38244. The 0.786 is connected to this golden pocket here. This is just golden pocket between 083.618 at 39424 and the high of 2020 before the COVID crash at 339.08. Okay, so listen, if you break down below this demand zone, you're likely going to retest 38244. But we'll see. I'm not going to say the sky is falling when one fucking acorn fell off a tree and everyone thinks that we found our Enron now because Michael Burry tweeted it out. All the banks are failing, yada, yada, blah, blah, blah. Listen, the banks aren't going to fail this time. They're just going to switch to CBDCs, and the only people that are going to get fucked are us. I really don't think we're going to see a financial crisis like we did in '08. Most of us weren't even conscious of like our surroundings back in 2008. So to claim to be such a fucking expert on market crashes is very arrogant, and it's probably why you don't get the respect that you think you deserve. Not the people that are, they were around trading during those times and could actually read the newspaper, because that's what you did back then. But I'm talking about the Furus on Twitter. Between the ages of 19 and, we'll say, 32, 34. Get the fuck out of here. Unless you studied that shit, which most of you haven't. Most of you, probably don't even have a library card. I'm just going to shut up. That's the video. Congratulations on making it through. How long was this? 45 minutes? Not too bad. Not too bad. Hitting the 45-minute mark. Catch you on Twitter. Catch you in the Discord. Watch out for the signals today. Hop in the Discord. I'll update the link in my Twitter bio because it changes every week. And have a great day. Finish the week strong.